November 19th, 2024. I'm starting this review a little bit early. Obviously, the market closes in about 45 minutes. For what it's worth, I think it's reasonable to be long in this area. I think that this rally from 48 through 54 is going to need a second leg, and I don't think this was enough of a second leg. So I do think that we're going to close higher than we are right now. We might close somewhere up in here, or I at least think we're going to test somewhere up in this area. I'm not sure if it stays there for the day, but I think it's reasonable to be buying around this low over here, expecting that we're going to get another leg up. And if you get a bear bar or consecutive bear bars closing near their lows, you can just exit the trade. Today was a bull trend from the open. When you get a big gap down, you're supposed to be expecting a second leg. And it's still true that you should be expecting the second leg, but you don't know what it's going to look like. The reality of the gap down is you're getting a gap down into a support area. So we had a big sell off, a gap down, and then a bear trend from the open, a big sell off, a bounce, which ends up being a lower high from here. And then we basically just got back down to the low. So as much as it is good for the bears that we're gapping down into this area, there's probably traders willing to buy somewhere down here, expecting a second leg sideways to up. Bar one, a bull bar, but a large tail on the top. Probably going a little bit higher, but the gap down tells me that we might get a second leg down for the bears. Again, I try to think of gaps as a big bear bar. So for me, when I see a big gap like that, to me, bar one is just a big bear bar. Bar two, consecutive bull bars. Two is not able to close on its high, and it has a large tail testing back down to around the open of the day, where traders bought back shorts. So buyers below, probably sellers above. Three is a good looking bull bar, but what do you notice? There are large tails on one, large tails on two, and large tails on three. And tails are indicative of a channel on a lower time frame. So you have to be expecting that there's going to be buyers below three if we get below there. But is three a buy the close market? Probably not as much, because of the same thing. It's a bull channel on a lower time frame. So you know that there are probably buyers below. However, you also have to realize, most traders not that interested in buying the close over here. So not really a buy the close bar on three, more of a buy below type of bar. Four, you can see a bear bar, but buyers below three during four. The bears, they need consecutive bear bars closing near their lows if they want to start some sort of measure move down. Odds are we're probably going at least a little bit lower. But again, four might be good enough for a second leg, but 1 through 3 is definitely going to get a second leg. If it was just bars 1 and 2, it probably wouldn't need a second leg, but a 3-bar micro channel, 1, 2, and 3, is most likely going to get another leg sideways to up. 5, another bear bar, but a large tail on the top. Sorry, a large tail on the bottom, small tail on the top. It's not really great for the bulls. It's a lower low double bottom, 1 and 5 for the bulls, so not really all that awesome. And the bears, if you sold below 4 and you sold 5 and you got 5, are you happy with how that worked out? No, not really. It's not really that great of a bar. So probably traders buying around the low, willing to scale in lower. 6, a bull bar, but probably sellers above 5, scaling in higher. However, you don't want to sell above a bar this far below the moving average. There's probably buyers somewhere below, scaling in lower. 7, a bull bar. You can see there are buyers below 6. So probably going a little bit higher. Does this look super bearish? No. So the whole thing could be could be a bear flag, but the bears are going to need to do more if that's going to be the case. 8, a bull bar with a large tail on the top. So probably going at least a little bit higher, but I'm not sure how much higher. Again, every time we get a bull bar, we seem to get a bear bar right after it. So really not going all that much higher that convincingly. 9, a bear doji bar. So do you want to sell below 9? No. The bears are hoping it's a double top, 4, 9, and neckline, the 5 low, and that we're going to get a breakout below and some sort of measure move down. 10, a bull bar closing near its high. Good for the bulls. You can see there are buyers below 9, and there is a tail on the top and the bottom of 10. Probably sellers above, scaling in higher somewhere. 11, a bull bar closing near its high. Good for the bulls, a possible swing trade. Do you buy above 11? You can, but for me, I would probably rather wait for one more bar. The reason I'd rather wait for one more bar is that 11 is a swing trade and it is a tight trading range. So 1 through 11 is a tight trading range, and it's possible that the bulls have gotten 3 pushes up here. So I think that a lot of traders would rather wait and see one more bar. So if you're going to buy above 11, you have to be thinking about your follow through. And if you visualize, all you can see is bar 11, right? Pretend that the rest of the day doesn't exist yet. Let me get a sip of water. Hold on. All you can see is bar 11. You can't see bar 12 yet. But if you had to visualize what you want your follow through bar to look like, what would be the perfect follow through bar for you? 12 is probably that follow through bar. So whenever you take a swing trade, you should think about what you want your follow through to look like, and if that follow through will convince you that you're going to make a lot of money. And if 12 is the bar that would convince you you'd make a lot of money, then it's logical to buy at the close of 12. So buyers above 11 and a bull surprise on 12, probably going higher. 13 follow through, consecutive bull closes above the moving average, 12 and 13. So expecting follow through and expecting us to go at least a little bit higher here. 14, another bull bar, a large tail on top. You can see we're headed back into yesterday's trading range. We had a bull trend from the open and then a trading range for the remainder of the day. And you can see the bull trend turned into a trading range. And so we're rallying and we're headed back into the apex or the middle of that trading range. 15, another bull bar, a tail on the bottom. So overlap with the bar 13 high and 15 low. So at this point, we have a couple of open gaps. So take a second, pause the video. I can see that if you can only see the close of bar 15 at this point, we have two pretty clear and obvious open gaps. So pause the video for a second and figure out where they are. If you thought they were the 12 high and the 14 low and the 3 high and the 13 low, you are correct. This gap is a little bit more important than this gap, but they're still both relevant gaps and still indicate that we are probably going at least a little bit higher. 15, a bull bar, but a large tail on the bottom. As I mentioned, 16 follow through. So huge bull micro channel from bars 10 to 16. Yes, we're getting tails, right? 14, 15, 16 are all getting tails. And that's disappointing, but you have to keep in mind, we're probably going to get a second leg up from this. So even if we do pull back, what is there to sell? Not really anything. We're rallying way too much for traders to look to sell. So we're probably going at least a little bit higher. 17, a bear bar with a large tail on the top and a smaller tail on the bottom, but still a tail. So probably buyers below 17. Would you ever sell below 17 and put a stop below 17? Probably not. And if you did, you'd probably be expecting to lose money. So the traders in this area who are selling below 17 are expecting to lose money, and they do. 18, buyers below 17, not all that surprising. A large tail on the top, so some of the traders who bought the close of 16 disappointed 17 used 18 to get out. But still, we're going to go higher. Look how many bull bars we have to the left. You can't expect one or two bear bars to reverse all that. 19, another bull bar. Initially, probably sellers above 18, scaling and higher. 20, another bull bar, a large tail on the top, tail on the bottom as well. 21, another bull bar. So we have 4 straight bull closes after an 7 or 8 bar bull micro channel. Again, we're going to go higher, but you have to wonder how much higher. We might be converting into the bull channel. A bull spike is the first step of the market cycle. A bull channel is the second step of the market cycle, and then a trading range. So spike channel trading range, we might be converting into the channel. Doesn't mean it's less bullish. It just means the bulls. I heard Brad say something the other day, but he said something about just being more efficient. Bulls will be more efficient with the way that they buy. So we have, obviously this wasn't a bull channel. This ended up turning into another spike, but this was the start of the bull channel. The bulls, they bought the 50% pullback. Another bull spike, but instead of buying these closes, they bought the 50% pullback. There's nothing wrong with buying these closes so long as you understand that we're probably going to pull back first. So you cannot buy the close of 45 and exit below 46. That just doesn't make sense. If anything, you want to buy more below 46 or more below 45 around 50% pullback. 1 second. So where was I? 22, a bull surprise. So you can see we're getting a bull channel, large tails on the tops and bottoms, and then a bull surprise breakout on 22. Large tail on the top, so maybe not quite as good as it could be, but we're probably going at least a little bit higher. 23, an inside bar, a high one buy for the bulls. This whole move is going to get a second leg. It could be part of a second leg from this, but it's still going to get its own second leg. By the way, if I was long, I would not like what is forming here on 71. 71, there's still 3 minutes left in the bar. But if 71 is a bear bar closing near its low, I think most bulls will exit. Really, if you're buying the close of 67, or let's say you waited for a bull bar closing near its high, 68, the trade kind of just needs to go. So I don't know I don't think it's going to be a bear bar closing near its low. I think we're probably actually about to trigger the buy above 70 and start to rally, but I don't know how high the rally goes. Again, I think somewhere in this area around the 61 high would be a reasonable area to take profits had you bought anywhere down here. So, and exit below any bear bar closing near its low, because again, the rally probably just needs to go. 24, another bull bar closing near its high. Good for the bulls. Again, expecting us to go at least a little bit higher. 25, another bull bar. Again, it's not too much to say here. It's just a lot of bull bars. So you need to keep it simple and just think to yourself, what's going to happen when we get a lot of bull bars? We're going to get a second leg up. So, buying the close of 16, there's at least probably an 80% chance that you're going to get a second leg up. There might also be an 80% chance that you get a pullback before you get a measured move, right? So let's say you're buying the close of 14 or 15. You might have an 80% chance of getting somewhere up here, or at least some sort of strong looking second leg before you get down here. Maybe 70% chance we get up here before we get down here, but probably at least an 80% chance that we're going to go sideways in some fashion before you get there. So just because the setup is high probability doesn't mean it's going to go in your direction right away. A lot of times those trades take time to form and time to work. So you have to be okay with sitting through bars. 25, another bull bar, tails on both sides. 26, follow through for the bulls. We're getting doji bars, so we're probably going to start to go sideways pretty soon here. 27, a doji bar. 26 and 27 are doji bars. So again, I think we're going to start to go sideways, and you have to keep in mind we're around this trading range. And another little quiz, what is the magnet that we're testing right now? It's visible, right? Between these 2 days, the magnet is visible. What is the magnet? It's the 27 low. Why? Because the bulls who bought below that 27 low did a reasonable thing. It wasn't great, but you could buy below that 27 low, expect to be able to scale in and make money. And the traders who did buy below that low, maybe they scaled all the way in, scaled in on the open, and now that we're getting back to that area, you can see they're selling. So it's not super surprising. So for me, by the way, this is an interesting bar on 71. You could buy the close of 71. You can see how it popped immediately on the open, and that's because traders did buy the close of it. So why are you buying the close of 71? If I said that I was going to exit below a bear bar, then why would I buy the close of 71? Well, the reason you would buy the close of 71 is because you can now put a stop one tick below 71. Bulls are going to exit, right? The bulls who are buying, putting yourself in their shoes, they're buying for any reason. They're willing to exit below 71, a bear bar closing near its low. And the traders who are buying this close just have to have a stop that's maybe 1 point. And the reward is potentially, 4, 5, 6, 7 points, whatever, a bounce somewhere up into this area. So if you're risking maybe a point and your potential reward is 6 or 7 points, that's really good math. It doesn't necessarily have to work a whole bunch of the time in order for this to be a profitable thing to do. But you can see the traders who bought that close, if you got filled around the close, you already have a point of profit-ish. So the traders, it's pretty easy. You could definitely make 2, 3, 4 points here, only risking about a point or so. So that's why traders would buy the close of 71. And that's why what's happening right now is happening on 72, because all the traders who were buying for any reason, betting we were going to get a bounce, now have their stops below 71 and are buying the market. Anyways, 28, an inside bar. It's a high one for the bulls. Probably sellers above, probably buyers not too far below. An outside down bar on 29. 29 probably needs a second leg. So in my mind, a lot of the traders are going to start to give up and let us go sideways here. 30, a bull bar, a large tail on the top, probably buyers below, probably sellers not too far above. 31, you can see probably buyers below 30 somewhere scaling in lower. It's a bad low, one short, but most traders aren't really that interested. 32, an inside bar, a bull bar, closing near its high. It's a high 2 for the bulls, but not really that great. Tight trading range, 30 through 32. Can you buy up here? Yeah, we're in a bull trend. You can buy up here, but your stop needs to go below the most recent bull leg. So you're not buying above 32 with the stop below 32. If you're buying above 32, your stop's below 18. Those wider stops make a lot more sense in this type of scenario because we're starting to go sideways and you're going to get a pullback. 33, an inside bar. It's consecutive inside bars, 32, 33. Expecting sellers not too far above and buyers not too far below. 34, sellers above 33. And then big bear bar, 35, but it's just trapping out weak stops. So the traders who sold for any or bought for any reason with a bad stop are probably going to start to get trapped out here. 36, the bull bar closing near its high. Good for the bulls. Probably buyers, not necessarily above, but at least on a pullback. And then 37, consecutive bull bars. Good for the bulls, 36, 37. But what are the odds with how many strong breakouts we've had today? We had a really, really strong move up from 10 to 25. And then we're starting to go sideways here from 26 to 32. or sorry, 35. So what are the odds that 36, 37 is going to start to lead to another really strong bull breakout? It's really not all that high because of the fact that we've had so much to the upside today. So traders are going to be more interested in buying a pullback than necessarily buying highs. And that's what ends up happening here is traders get a lot more interested in buying the pullback. 39, an inside bar. No, sorry, not an inside bar. Let me get us water real quick. 39 or 38, I meant. Sellers above 37 initially because why? Bulls aren't super eager to buy the close of 37 during 38. 39, a bear bar. Why are traders not eager? Because it's probably starting to become a bull channel, I suppose would be the main argument there. 39, a bear bar. You can see the bulls who bought above 37. What were they doing? Well, there's two ways to manage it if you buy above 37. You buy above 37, you use a wide stop, maybe you're willing to scale in at 50%, and you expect another leg up. Or the traders who are probably more algorithmic buy the close of 37, disappointed 38, you use 39 and scalp out. And that's what ends up happening there. You get a bear bar on 39. 40, three straight bear bars, 38, 39, 40, but there's nothing to sell. We've been over the moving average for so long. This is just around 50%. And there's probably more likely buyers in this area. 41, a bull bar, a high one, probably sellers above. You can see there were sellers above during 42, but buyers below 42 during 43. 43 is a high two for the bulls, and then 44, a bull bar, but a large tail on the top. 45, consecutive bull bars, so 44, 45. And you can see we rallied to a new high there, so probably sellers not too far above since it's a bull channel at this point. I actually just want to check something. I want to see if these bulls were able to make 5 points. Okay, so it hit exactly 5 points. So it probably has to go one tick above 72 in order for bulls to make 5 points who are buying the close of 67. The reason you would buy this close and the reason I'm bullish on this area is because of this rally, the whole rally in general. If you just think about it, zoom out a little bit. This is really small and probably pretty minor. Yes, we're in a trading range, but we just had a rally from basically bar 1 to 54. What are the odds the move from 60 to 63 are going to overrule that? Not very good. So I think we're probably going higher. 45 consecutive 45 consecutive bull bars to a new high, but look what we've been doing at the new high. 36, 37, bear sold the new high. So 45, they'll probably also sell the new high. Does that mean we're going far down? No, it just means expect a pullback. So buyers below 46 during 47, bad low one short, bull channel, and then 48, an inside bar, bull bar closing near its high. Expecting sellers not too far above and buyers not too far below. An inside bar 49, consecutive inside bar, so an II, a high one, probably sellers above scaling and higher. Then you get a surprise bull breakout on 50. We're creating a triangle here. So we have a triangle, good for the bulls, probably going at least a little bit higher. And 1 second. Sorry, I was just checking. I accidentally deleted the thumbnail before I took a picture today. So I'll just have a different thumbnail today, but it doesn't really matter. Anyways, we have a triangle, and usually breakouts above bull channels aren't necessarily the strongest, but you can see here, we're getting a breakout above on 51. Increased chance of a possible successful breakout, but again, most of the time, this ends up being the final buy climax. 51, a bull bar, consecutive bull bars, 50, 51, good for the bulls, but again, looking very climactic. 52, follow through for the bulls, expecting us to go at least a little bit higher here, but you have to keep in mind you're buying high in a trading range. 53, another follow through bar, but a tail. Again, look how much we've gone up today. What are the odds that this just continues up and turns into a massive bull trend? They're really not all that good. So for me, I would not be long. 54, a doji bar, probably sellers above scaling and higher, and then buyers below during 53. And then 56, buyers below 55. An inside bar, high one, 57, and then sellers above. Big surprise for the bears, outside down, 58. The only issue with 58 is it's around a 50% pullback. So there will be traders buying in this area, buying the close, trying not to let it trigger. 58 probably needs a second leg down, so a lot of traders buy the close, not trying not to let it trigger. 59, a high one or a high two for the bulls, but probably sellers above scaling and higher. And then 60, a bear bar closing near its low. Disappointing for the bulls, and we're probably going at least a little bit lower. Some traders don't give up after 58 since they bought the close of 59 and we started a rally, but most traders will give up below 60, and that's causing 61. 60, 61, as good as it looks, how far down are we really going? Probably not very far. If you sold in this sell-off and you made money, good for you, but you should also start to think about what is it really great to miss the rally? I mean, okay, this is assuming, assuming the only thing you did today was sell above 57 and you caught all of bar 58 and you made 5 points today. That's still a good job. You still did well. But if what all you did today was take the one short, you should really start to think about it's probably better to be looking to buy on a day like today rather than looking for the spot where you're going to fade the bull trend. Instead, it's probably better to just buy in the bull trend and watch the market go higher most of the day. It's really important, even if it's whatever your position size is. Let's say you wanted to buy above 11, you put a stop below 10, and then you got 12, and you panicked and you weren't quite able to buy above 11, so you froze, and then you got 12, and you thought, well, now I'm not going to buy. Why not? I mean, 12 is the perfect bar if you bought above 11. If you had bought above 11, 12 is the exact bar that you want. There's no difference between buying above 11 and holding through 12 than there is buying above 12. It's the price is a little different, but it doesn't matter. It's not about that. The price action doesn't care whether you're in or not. What you should be focused on is if you didn't get your trade, then you buy a little bit later. For example, me today, the system, the leg one, leg two thing that I'm doing tells me to buy the close of 13. I should be buying the close of 13 and going for a measured move. I had to step away from my screen for a minute just after bar 12 closed, and I came back and 14 had just closed, and I saw 14 had closed, and my system says buy the close of 13. Did I instead just sit out and not take the trade? No, I just bought the close of 14. Because if I had bought the close of 13, I still would have been happy with how 14 looked. So I just bought the close of 14 instead. Got out somewhere up here. But it's important to just, stop thinking about the market from your perspective and think about it from a perspective or, your P&L and your position, and start thinking about it from the perspective of the bulls overall and the bears overall. So I think on 62, another bear bar, but a little bit disappointing. You can see we're at the bottom of the rally from 48 to 54. So there's probably buyers down here scaling lower. 63, a bull bar, micro double bottom, probably buyers below. 64, second leg down for the bears, and then a surprise on 55. For me, 55 is the only reason I was interested in buying. Obviously, we had the rally from 48 to 54, which is initially why I think we're going higher. But I'm not just going to buy the close of 64. I'm going to wait for some sort of bullish sign, and 65 is that bullish sign. But no one really wants to buy above 65, so it probably makes more sense to look to buy a pullback. 66, a bear bar closing near its low, probably buyers below, scaling in lower, not a good low one sell. This is a buy zone. 67, consecutive bear bars, but again, probably buyers down here scaling in lower. Then 68, a bull bar closing near its high. You could buy above 68 for a swing. Reasonable if instead of buying the close, whatever, below 66 or the close 67, reasonable to wait for a bull bar closing near its high. 68, 69, follow through. And then obviously I already mentioned 70, and then bear bar, bulls buy the close, causing 72, and then inside bar 73. So if this is going to go, it's just going to bounce. So it'll probably bounce the next bar or two. And if it doesn't, let's say 74 is a bear bar closing near its low, bulls are going to get out. I think most bull stops are still below 71 because they know that we should just rally. If we're going to rally, it should just kind of go. So 73 probably should be at least a decent bull bar or some sort of bull close. 74 should be at least a decent bull close. If 74 is bear bar closing near its low, I think a lot of bulls will end up getting out. The daily chart, not quite finished with the day yet, but an outside up day. Good for the bulls. Increased chance of us bouncing a little bit. You can see bulls bought the 50% pullback of this, but I think that, yes, we might rally back up to this low or this low, one of these breakout points, but there'll be sellers at the 11-13 low or sellers at the 11-12 low. The weekly chart, this is going to get a second leg up. Disappointing bear bar, though. So if we rally, this might need a second leg, and there could be sellers somewhere above here. And then the monthly chart, it's really just, we're not all that close to the end of it, I suppose. So for reasonable stop orders today, whoa, hold on. Reasonable stop orders today, I would buy the close of 12, 13. You could buy above 11 too for a swing, or you buy the close 12, 13, 14, 15, 16. You could buy, probably buy below 70 if you wanted to. 23, 24, you can buy, but it's getting high in the range. So there's probably going to be a pullback soon. You could theoretically buy above 36, but you need a wide stop. You could buy the 36, 37, or buy the pullback. You could buy a 46, 44, 45, or buy the pullback. You could buy 50, 51, 52, whatever, but a little bit difficult. And then I probably would not sell anything on the way down. You could buy above 68, But I think if 74 closes on its low, you get out, or any bear bar closing near its low, you get out. And, really just looks like a tight trading range. So most traders should be done for the day. If I'm being completely honest, once we start to do this, most traders will just be done for the day. Really not worth it to be in too much of a position after that. All right, that's going to be it for the review today.